Maverick. Noun, unusual person. A visionary, leader, go-getter, an independent thinker. They see the vision for their life and pull that future towards them with an unyielding belief that things can and must be better. They achieve what most won't. Innovative, influential, daring, and direct, with a remarkably high tolerance for taking calculated risk. A foe to the status quo. This is Passive Real Estate Investing with Mavericks. Your host, Neil Timmins, has been involved with over $300 million in real estate transactions. He's a published author, commercial property investor, and real estate syndicator. This show is for those who want to learn how to earn passive income through real estate investing. Now, here's your host, Neil Timmins.
On this episode of Passive Real Estate Investing with Mavericks, I sit down with Glen Mather to uncover how to unlock $14 trillion in IRAs, including yours, for real estate. Welcome to Passive Real Estate Investing with Mavericks, where we provide actionable steps to grow your passive income and become job optional. During this episode, you're going to discover how to tap into IRAs in order to put it into real estate, among many other things. Now, for those of you who are new, I'm your host, Neil Timmins. I love passive income from real estate. Before I introduce you to today's Maverick, I want to make a request that if at any point you like what you're hearing, well, give us a thumbs up or subscribe to the show to make sure you never miss an episode. If you love what you're hearing, well, give us a written review. Plus, be sure to take a look at the description of this episode as we packed it with thousands of dollars in free resources. So today, we've got the privilege to learn from a person who's been in the IRA business now for 20 years. Prior to his career in IRAs, he worked in Silicon Valley. Yeah, but all that changed when he had his eyes open to investing, self-directed investing specifically. I would describe today's Maverick as somebody who's absolutely passionate about taking control over your own dollars and dictating your own future. Let me introduce you to today's Maverick. I've got Glen Mather here with me. I'm excited to have him here. Glen, how are you?
Neil, doing great. Thanks so much.
Thanks for your time. I'm excited you're here. Well, for the audience's sake, tell us who you are, where you're from, what do you do?
Well, my name's Glen Mather, as you said, and you actually pronounced it right. Thanks, Neil. And the other thing is I own a little company called NuView Trust. We're a trust company. And people ask, well, what is a trust company? And I may not have enough money to be in a trust company, and that may be true, but not this trust company, because what we do is we're a custodian for people's assets that want to take their IRAs, their 401ks, basically their tax advantage money, put them on a platform and make their own choices for retirement. Our company's located in Longwood, but we have clients in every state, and we have about 12 different countries that are also represented in our client base.
Wow. Quite a presence there and a whole bunch of things. I think when, traditional, I think this, 10, 20, 30 years ago, somebody would think self-directed IRA and it sounds so confusing. I don't know what to do. I don't know how to do it. But things have evolved in a very big way in the where you play and the people you serve. They're not necessarily, the kind of the hidden wealth of the country. This is becoming far more mainstream today.
Yeah, I think that's true. I've been told that there's over $14 trillion parked in IRA money, which, Neil, I used to think was a lot of money until I saw the deficit. But but in any case, there's a lot of money, and people are really betting on that for their retirement. They understand that unless you happen to work for certain governmental agencies, you're generally not going to get a pension. So it's on you to figure it all out. And it can be a big burden for some people.
So when it comes to self-directed, well, maybe what do those words mean, self-directed? And kind of give us some color surrounding how do they work? What can somebody do?
Yeah, well, there's two components to this, Neil. One is the structure of a plan or an IRA, and the other one is the uniqueness of self-direction. So just to cover the first base, Congress set up IRAs in 1975. They did that at the behest of business, right? As you know, Congress is influenced a bit by business and their contributions. And they said, hey, let's figure out a way that employees can take care of their own retirement. We cannot compete with the Japanese. Remember that? That was the Japanese at that time. So they petitioned Congress. Congress came up with the first IRA, went into practice in 1975. Didn't take long for businesses to understand this too. So they said, we want a business version of this. And that's when the first 401k was also launched. About 6 months later, it took Johnson & Johnson about 6 months to figure out what that was to be. So these structures were set up and they've been modified over the years. Of course, the contribution limits keep getting raised and raised. There's 4 different types of IRAs. There's HSAs. There's even a Coverdale savings account, all that kind of have that same idea. The government wants to push you towards something so they incent you by tax savings. And that's really what those structures are. Now, those structures are the same, whether they reside at NuView Trust or Charles Schwab. All the structures and rules around it are the same. The big difference, and when you hear the word self-direction, is really, I don't quite like it because it's a little bit of an aberration. You can self-direct in the stock market, right? So it's really a little more than self-direction. It's self-direction and total choice. That's the way I would say it. Because what happens is that 90% or probably closer to 95% of everybody's IRA wealth and retirement wealth is stuck in the market. So is that real choice? Well, it's not much choice because what we allow on our platform, when we call it self-direction, is we allow people to invest in everything that the IRS does not prohibit. It's a long list, and I'm sure you're going to get into some of those, asking me about some of the questions, and I can explain what our clients do. But yeah, so there's very few things you're not allowed to do, and just about everything else is fair game. And if your desires are to invest in something that's where you're not competing against millions of people, then self-direction is going to be far more attractive for you. But they both have the same structure associated with them.
Yeah, same structure. You just have a freedom of choice. And those choices, let's hit the hot Mohammeds. I mean, real estate's probably top 1 on the list, maybe top 2, certainly in the short list for most common. But what are below that? What are some other things that one can invest in?
Well, I mean, it's interesting. Of course, that was what got me started, was the fact that I felt I had a chance in real estate, at least a chance to understand my moves, and I couldn't do that in the stock market. So it's what got me started. And I think it's what gets a lot of people started. But there's also a part of this which really goes with institutional investors and people that are syndicating. So in other words, if you're trying to raise $3 or $4 or $5 million, now people understand that for some people, the greatest amount of wealth that they have in a household is in the IRA. Mm-hmm. So they're going to pitch to your IRA, right? So you have the marketplace coming in and say, hey, buy it in your IRA. And they never heard that before. And like you said, 20 years ago, when I started this company, nobody knew about it. So my first 10 years was all about education. And now it's changed. The message is, the other things that you can do that are a little bit more obscure. I'll tell you what I'm going to do. I'm going to tack to one of the most obscure things and bring you back to the middle. How's that? Just to give you an idea. Yeah. Well, just outside the office of my office in the window is one of those annoying plaintiff lawyer billboards. I can go out and see it's Morgan & Morgan. I guess he's pretty big all over, but he started in Florida. I hate to tell all the people that aren't from Florida, yes, we're responsible for Morgan & Morgan. But I see him outside the window, and so he's a slip and fall lawyer, right? So what you'll do is you'll generally go there, and if it works, and if everything works according to what Morgan & Morgan would like, you might collect a judgment. And of course, it can also be a very, very severe accident, and it might be millions of dollars. Mm-hmm. Well, did you know that you can take those settlements and actually sell them, or actually assign them to somebody else? So I'm a slip and fall victim. Every one of those settlements are paid over time because we know that the time value of money diminishes the payout, right? So you get $1 million, but you're going to get it over 10 years. Well, a lot of these people that I would just say broker in these types of accidents, they don't have much money and they want it all up front. So they'll sell it to you for 60 cents on the dollar, 50 cents on the dollar to have it today. Do you know I can buy that in my IRA?
Wow.
That's perfect for me if I was old. You can tell by this face that I'm still in the bloom of youth. But if I was older, I might like something that pays over 10 years. Could you imagine that?
Right.
How safe is it? Well, it's adjudicated by a court of law. That's pretty safe. And who's paying it? An insurance company. So you can say, I distrust insurance companies and I distrust judges and court systems. You wouldn't have much leg to stand on. That's pretty safe. Much safer, I think, than my dividend that I might be getting from a Wall Street firm. So that'll give you an idea of something very obscure. Do a lot of people do it? No, they don't. Lending money is a big deal. Mm-hmm. So if you understand you're in real estate, you understand what typically keeps buyers from buying isn't a lack of desire or maybe even a lack of earnings. It's a lack of qualifications from the bank.
Correct.
So private lenders do very well with IRAs. So, and a lot of them use IRAs as a source for money. And then they go out and they'll provide maybe the IRA person with a 6-8% return, and they'll go to the market and lay it off at 12%. And they'll turn this money, they get points. So all of this is very, very attractive. And it's an ecosystem that a lot of people that aren't in this business don't understand, but it's an ecosystem that's making people very, very wealthy. So I just gave you a couple ideas of things that are a little bit different, Neil, but I'll be glad to keep going if you'd like.
From an investor's perspective, this sounds like I'm going to have to learn some things. It sounds like I'm going to have to do some things to place my own money. Isn't it just easier and more profitable just to invest in the stock market where a traditional IRA has gone?
Well, I'm not going to suggest that people aren't getting wealthy with the stock market, and it's just a matter of choice of where you think you are. So for instance, the first people to come to us are typically people with your background, Neil. You've been in residential real estate. You may have climbed the ladder or shifted to commercial, which is sort of the things that you talk about. But generally speaking, you understand the business. So you're in an orbit where people need money. And you can get it securitized with something that you wouldn't mind owning in your IRA if you didn't pay, right? Mm-hmm. So it's not a hard lift for you. It can be a hard lift for other people. I think one of the groups of people, and we deal with a lot of professional people, let me tell you, the more degrees you have, the less competent you are in running your own financial world. It's true. And I came to that conclusion because I think it's because people are so focused in what they do for a living that they don't broaden to other things. Meanwhile, those of us that cut our own lawn and do a lot of other stuff, we're kind of used to hustling for their buck. And so we make money differently. One of our biggest groups we have, though, is airline pilots. That doesn't surprise me, though, because people that have a self-directed IRA do have a sense that they can do it. They have a level of self-confidence, and I don't want a pilot that doubts their own ability to fly a plane, and they may not have any more ability to plan their financial future, but they feel they do, and they feel they can. So if you're someone that says, well, I'd rather be in the stock market, let me just tell you that there's very simple and easy to understand purchases that you can make in the alternative space that probably make more sense, and you will understand them better. So for example, debt lending. Well, I don't have to know how to lend. I lend my money to a third party who knows how to lend. So basically, he puts that in play. I'll take my 8, 9, 10% from him all day long. He turns the money a couple times. He's a hard money lender, so he's doing it probably in about 6-month increments. He's making a good money from my money, and I'm getting 10% like clockwork. And as interest rates rise, it goes to 11% for the next tranche he gives. I don't have to be brilliant at all. All I have to do is judge his character, and understand his history and how long has he done this, and understand what happens if the loan isn't repaid. How much will I get back? How hard will it be to get rid of that asset or potentially hold on to it? I don't think that's hard. I can certainly understand it. And what you do in this world, Neil, of self-direction, you surround yourself with people that know how to do it. So at NuView, we have a community. And so we do events. We certainly have a lot of educational material. So you don't feel like you're all alone and you're doing it for the first time.
One of the things that I get a lot of feedback from and talk to a number of folks is when they ultimately make a decision to go, you know what, I'm going to take more control. I'm going to be, in my world, I'm going to be into real estate. I'm going to take more control of my dollar and cents. I'm going to exit the stock market, at least to a portion of what they're doing. It's because I don't even understand how the stock market works. I don't even know what I'm investing in. Neil, when I invest with you, at least I can go see the property, touch the property, understand there's a loan. I understand what a mortgage is. It may have another zero next to it, but I get it because I got a mortgage too on my house. That's a lot of the feedback I get is sooner or later it catches up with them that they don't even understand the stock market. They don't know what they're in.
No, and I think it's the very thing that you said is we confuse ease of access. That's all electronic, right? I don't even talk to a human being anymore. It's a pretty good deal if you're Schwab. You spend a lot of money on software, and then you don't have to spend for anything more except upgrading your software because there's no humans involved. If there are, they're going to take a percentage of your assets as a fee. And there's nothing wrong with fees. We charge fees. But our access is not behind electronics, it's human access, because we know that when you're buying and selling real estate, there's more than just a click of the mouse. And we're moving, actually, in 2 months, we're launching a brand new portal that will allow you to do about 80% of your transaction online. But when you have 4 or 5 different individuals or professionals associated with title companies, and you have a realtor at both ends, and you might have appraisers and inspectors and all of that has to be coordinated, a lot of times it can slow things down and intimidate people. But I mean, it's what we focus on, and that's what we do. I think we sent out 7,000 property checks for taxes just a couple of weeks ago. So we're kind of used to doing that.
Tell me, why would somebody give consideration to investing in real estate utilizing their IRA? They give up, right? They may not get some of the benefits of depreciation, but I suspect there's another side of the coin in which a structure can be put in place that has tremendous positives.
Well, here's the thing. I agree with you. Not every context, IRAs are not the best way to hold every asset. All right. There's a lot of tax considerations going on. I'm a little simpler minded in this sense. I will tell you, Neil, there's probably, even in our clientele, there may be only 20 to 30%. Now, I don't know all their personal situations. We're not fiduciaries, so we don't know how much people earn. But I would suggest to you, they've got 2 pockets, right? One is pre-tax, or let's call it IRA pocket. Not all of that's pre-tax. And you have your other pocket that's, it's what's left over from your paycheck. And it's all the stuff that you've saved from that and invested. Most people's pocket have way more in their retirement plan. Mm-hmm. So it's not a real sort of technical argument. It just doesn't exist. People only have one pocket. So that's all they have to go do real estate. Now they could go on and if they have enough for the down payment, right, they can go get a loan on the non-IRA side and leverage it. It's true. Those days it's harder to make those numbers work today than it certainly was two years ago, but that's always possible. And, if as far as writing off depreciation, unless you're a real estate professional, you can't do that except write it off the gains on the property that you're doing. A lot of people kind of think, well, this takes care of all my taxes, but it really doesn't. So shifting to the advantage, other than the fact that that's where most people have their money, the advantage is if you're going to sit on it and just make income from it, you can probably buy about the same inside or outside if the money exists there. But where I find I have most money in real estate is I love the fact that I can get out of it. So I can move to it, and I can move to a commercial building, and then I can move to lending money, and then I can jump back into markets. So it's that ability to move, and when the opportunity presents itself, inside an IRA, you don't need an accountant. You don't need anyone to really review anything. Best thing you can do is have somebody review it that understands investments, right? The most important person on your team isn't your tax advisor. They're always going to say no. It isn't your attorney. They're always going to say no. And I'm kind of saying that tongue in cheek. Yeah. But it's really the advisor on how good the investment's going to work out, right? No one has really been really angry at themselves for having a great investment and perhaps not the best structure. So it's having that person on your side. It's having a person like Neil that may be in your own town, and find out who those people are. The rest of these people are just supporting cast, but the people that understand investments are probably your most important.
Yeah, no, that's well stated. Tell me, as you look forward to 2023, are there any changes? Is there anything that somebody should be mindful of that happen to be transpiring right now? Are we kind of, from a statute standpoint, from an IRA standpoint, it's really a function of them taking, and maybe the stock market has a piece to it, the uncertainty that we're experiencing right now in the stock market and the banking market. Maybe that's a component of this. I just thought I'd throw the question out there. Is there anything in today's world that one should be cognizant of?
Well, yeah, it's kind of interesting. You're not going to get me go down the political side, even though that's interesting to talk about. Ironically, our business has done the best generally during Democratic presidents, and I can't tell you why. But I think maybe it's uncertainty. People come to us in times of uncertainty. When the stock market is booming, that's our biggest competitor because everyone can close their eyes and throw in the stock. And you remember, about 3 or 4 years ago, that's what it was like,
True.
right? So everybody was getting 18 to 20%. It's pretty hard in the alt space to say, well, I can do better. Raise your hand. What I can just say is in the alt space, you can do better longer than you can in the other space. As far as where things are blowing, it used to concern me over time because understand that my entire business is based on IRAs. And if Congress decides to do without them, then I'm not in this business anymore. I might have to come out to in Iowa and come work with you. Sure. But the problem is not the problem. The good thing is Congress understands that they don't have enough money in their coffers to continue to up Social Security, right? Right. Trying to patch it.
Correct.
So what they want to do is to make sure that people have more money in their IRAs. So now, that one of the things they did in 401ks is they made every HR person automatically sign up employees. And then you have to say, no, I don't want to.
You have to deny it.
And you have to sign them up, I think, with a minimum of 4%. So they understand that Americans generally don't do any good savings without payroll deduction. It's a dirty truth, but it's true. We don't do a good job. So they're pushing more and more. The Roth IRA didn't come out of the gate. It was about 15 years after the original IRAs. And that was because people weren't putting enough money in. So that was an enhancement. And I will tell you something. I used to go for, we offer Roths and we offer traditionals and SEPs and simples. So I was above it all. I was just saying, well, I don't have an opinion. And the older I get, the stronger my opinion is. If you don't have a Roth, what are you thinking of? The only thing that you're thinking of is that your future is going to be bleak and you're going to make bad investment choices. Then you don't get the Roth because you don't pay the tax on it first, right? But I'm not sure I'd feel like a winner if that's what happens to my investment. So I just convert a little bit of my Roth every year and I'm just about done. So almost all my stuff will not be taxed in those glory years when I'm living on my retirement. And those are decisions. They're a lot easier to make when you're 60, or a lot harder to make when you're 60 to get taxed than it is when you're 23, 25, 30, starting to build, your wealth.
There's no doubt about that. And what I love about, everything in this space is the ability to have control, the ability to connect with either. It doesn't have to, if it's your own deal, great. From I'm an operator, so I can identify and do deals inside of it, or it's identifying the ability to find somebody like me, which I've also done, is other people in other markets who have lending needs, borrowing needs, whatever it may be, to be able to grow the IRA, whether it's a Roth or not. And I'm with you. I love the Roth component.
Yeah, Neil, you hit it on the head, which is not many people kind of say that someone in their investment circle, there needs to be 2 or 3 IRA holders who, just like the person that you mentioned earlier, doesn't really know what to do, is frustrated, doesn't feel like good about the stock market. Perfect person to go say, listen, you can become my money partner. Here's what I'm going to pay you. And what people don't understand is that here's how I'm going to pay you can be just about engineered any way you like. It can be paid up front. It can be paid over years. It can be paid in equity because they can end up with equity. All of those things are possible, and you can create it. You can create joint ventures, which are really cool. Those are one-time only agreements around a particular project. So if I have an IRA and you have the ability, you have all the knowledge, Neil, of course you do. I don't even have to use this as an example, but you may be tapped out, but you see something really good and you want to be able to go get this piece of property. You can sit down with a piece of paper. You don't really need a lawyer to do this. Maybe it's a good idea to pass it by them, but just here's the 5 dot points, the agreement between you and I. We're going to create a joint venture. And then I will fund that joint venture according to its terms from my IRA. And you'll do whatever additional funding or whatever additional work is. And we make the agreement to sell that property over so much time. And you'll get half and I get half. Your half won't be tax advantage, but mine will. So, Meanwhile, you got to do a deal that you wouldn't have been able to do, Neil, without my money. And I was able to put my money to work in something and get returns that there was no way that I'd get my returns from the market. And if I did, I wouldn't understand where they came from. But this I can understand. So having those people around you, and I have, I'm so fortunate because I run this business. I'm like a voyeur. I get to watch what everybody does, and I'm inspired by my clients every day. And you don't have to feel intimidated coming into this. I mean, this is a good place to put, one big toe or one foot into it and say, how's this going to work? Let me try. And then you're going to try and you're going to say, this investing in storage, that's pretty interesting. Or I can buy raw land. We had somebody here who made a lot of money finding in-lots. These are lots inside cities and even small towns that had several houses around the block, and there was one empty lot. They figured out pretty soon that if he could find the owner of that lot, a lot of times in Florida, they're out of state. And it's not just Florida. A lot of land is owned from out-of-state landowners. They just made an offer, and he picked these things up very, very cheaply because all it was costing that owner was taxes every year, and he was just happy to get rid of it. Then what he would do is he'd go knock on the two neighbors that are adjacent to the property and say, how would you like to buy this lot? They never took the time to go look at it, right? You and I would do that all day long, but
Sure.
They don't. He'd end up getting a down payment that would actually pay him back whatever he bought it for, and then a series of payments over 10 years. So he's built up this nice annuity of payments and with no risk, and he's doing it in his IRA. So it's kind of cool. So all those opportunities exist. You just need to know and have the ideas. And once you have the ideas, you know what it's like. It's just hard work, right? To figure it out, but you can figure it out.
Just work or relationships with those who will do the work. Figure out where to add the value, and the two of you come together and to complement each other. And then you've got something going there. I'm curious, Glenn, how you mentioned you've been in this business now 20 years. How'd you start? What's your background? What led you here?
The Lord, how about that? I mean, I think that, some people come to it from success on where they end. Some people come through it through, I don't want to say failure, but through changes. I came to this through changes. I worked for 13 years at a little company called Lockheed Missiles and Space Company. Mm-hmm. Not exactly what you would have thought of. And I worked in their super secret division, and I learned all about the silliness that goes on behind those doors, right? And after that, I left. I was in the Silicon Valley, and we started a cellular company, which didn't end up working out. I ended up becoming a strategy consultant in Chicago. And that was tremendous. And it was through that I kind of started to learn how to think strategically. And I think most people don't, right? We don't get trained in that. And I had the luxury of being trained by some really bright people. And I decided to make a change. This was right around 9/11, and the towers came down, and I decided to relocate my family to Florida. And my wife's family was here. So I started the business here. I had read a Wall Street Journal article about that you could use your IRA to invest in real estate. And as you know, in 2003, it was pretty rare. I didn't know a company like this existed. But the funny thing is, I was doing this myself through a local bank in Chicago. And so I was like, and they were charging me a lot of money for I think $150,000 I had, but I loved it. I loved the fact that it was just such a wonderful exit from the Wall Street to be able to buy this one lot in South Carolina. So I bought it. I think I was paying $3,000 or $4,000 a year, and I was happy because it was going up much faster than that. Yeah. And so when I learned about it, I called Hugh Brahma. He was in it with a company called Trust. And I said, I'd like to open an office of yours in Florida because you're in California. And he smiled and he said, give me your background, whatever. 3 months later, I opened the office, and I didn't know much about it, but I had a passion for it. And I figured there'd be one or two crazy people in Florida. And turns out there's thousands of people, not just in Florida, but all over that really love self-directing. And we've been able to kind of pioneer that in a long ways. We've been at it longer than most companies in our space. And it's great to be able to be in a business that you're really passionate about. And now I have really, really great people. We've got over 50 people working here to change people's retirement perspective.
Yeah, no, that's absolutely incredible. let's see this. I want to move on to the final segment, what I call the final four. Here's a lob ball for you. What do you think holds most in passive investors back from hitting their personal next level, whatever that happens to be?
I think it's a fear of failure, a fear that they can't earn that money again. And I think, depending on, they're starting late. Like, so the older you are, if you're trying to learn how to ride a bike or skip rope, it's really hard to do that when you're 40 or 50. I think there's a sense of that. I think most people need a guide. Once you're older, you need a guide, or you need a success story to pin it on. Somebody not something that you meet on the internet necessarily, or even on a podcast, but hopefully someone you know. And it can't, you can get to know a podcaster. You can certainly get to know people, and you can test them by age. That's the good thing I've got going is I got age, so I have longevity, been at it a long period of time. So if I'm going to say something to you, it's not for a fast buck, or it's not to get anything particularly. I just want a relationship over the long period of time. But I think it's that. I think it's the fear of failure. Sometimes it's a fear of a spouse. You fail all the time in the market, but no one ever gets on you on the market. But if you were to invest in Bitcoin, or if you were to invest with something you can do, or in gold or silver or platinum, palladium, which you can do in your IRA, all those things, if you do that, then you might be made fun of or feel diminished. I think it's that. I think we're so hung up on our ego, no matter what age we are, that we just don't like to fail publicly or maybe even privately.
Outside of work, what are you most passionate about?
I think it's my family, and they're growing up. They don't need me as much, which is really sad, but I should be happy about that, shouldn't I? I was just thinking
done
that
something right. Yes.
Well, there's the old song, by who's the singer? Cats in the Cradle. And where, the father is singing about the son and how he always was too busy for his son. Now his son's all grown up and his son doesn't have any time for the dad. And he said, my son my son's just like me. My son is just like me. And I don't want to be that dad. So I think that's it. I like to do a lot of things. And the one thing that I started 5 years after I started the company for 15 years ago was a charity. I thought that you shouldn't chase just profits. You've got to be impactful. What was the point of you starting this company? Helping people, okay, I understand that. But also, when you make a profit, what do you do? So we started a charity called Share the Love. And Share the Love buys wheelchairs. We actually buy them right directly from the factory, put them in a container and ship them all over the world to the places that need them the most. We do it 260 chairs at a time. And it was hard to raise the money, and it was so exciting to get our first container. And in 2023, we'll be delivering 10 containers to 8 different locations. And that's amazing. And our clients go with us and whoever else wants to go. And it's the most fun travel you'll ever have, more meaningful than ever. So that's also is kind of fun because you get to go guide an organization, but it's volunteers and nobody reports to you. So it's a whole different dynamic.
Pretty impactful.
Yeah.
Your favorite book?
Well, of course, the Bible is something I read every day, and I don't want to diminish that, but I'm going to give you a different one than that. The one that I most frequently have gone back to with our team, it's a very thin book. It's called The 5 Dysfunctions of a Team. And Patrick Lencioni, I believe is his name. And it talks about the different things about how you have to build trust and you have to hold people accountable and you have to have spirited debate and you have to measure the results. You deal with conflict. These things are so great. So I teach this now. Once a year, I have a leadership development program for 10 months. We run it February through November. And I see all these young people emerging into leaders. And it's changed my viewpoint of millennials. It's changed my viewpoint of the young people coming up. They're just as good or better than we ever were. We just judge it based on the ones that aren't. But I think that, so I read a lot of business books, and I think that's the one that lately for me has been the most impactful.
We launched the Maverick Vault this year. It's a collection of resources available to our listeners. I understand you're making a contribution to the vault, your e-guide. Tell us a little about that.
Yeah, I mean, what we've done is the idea is, I started out writing a book on self-direction, and there's other books out there, very good books. So what we decided to do is trim it down and say, what's the things you really need to know to get started? Because, can you imagine learning how to sail a ship while it sits on the dock for the first 4 years? No, you got to get your hand on the rudder, and that's the case. So it's a very short read, but it's going to tell you all the different things that you can invest in, the things that you can't. The IRS has a very short list, but interesting list of things you can't. Partnerships that you can put in place. So, for example, you may or may not know, but there's disqualified people in your parties. We'll tell you who those are and how you can still do business with them. You can't transact with them, but you can partner. And there's some stories of success that helps you kind of get out of that rut, like you said, about being fearful to start. Yeah. Well worth getting, and we'll certainly provide it to anyone that provides us their information. Be glad to send it.
No, that's terrific. You guys can get that www.themaverickvault.com. Well, this has been a wonderful conversation. It's you are a wealth of knowledge, Glen, and I can tell that the passion radiates through you. And I know how impactful this can be. If you can get somebody out, get them educated and get them out to take control of ultimately their financial future, huge, monumental change in their life and potentially, the life of their lineage.
Well, thanks for entrusting me with your audience. You've built quite a following, and I understand why. And it's been a real delight to be with you, Neil.
That's very kind. I appreciate that. For people, they want to find you, they want to follow you, they want to connect with you. Where can they go? What should they do?
Yeah. Well, everything is on NuViewTrust.com, but that's misspelled. So understand it's NuView. It's like behind me. I think it's there. And NuViewTrust.com. And just use that as your starting point. You're gonna find as a guide. It's there for institutional investors. It's there for individual retail investors, syndication investors. There's a whole vault of educational material and ideas. Or you can just call them and ask for Glen. If I'm available, this is a company where the CEO will talk to you. So feel free to do that too.
Wonderful. The links will be below in the show notes for everybody. Glen, I thank you for your time. Appreciate you being here.
Neil, delighted. Thank you so much.
You're welcome. Till next time, guys. To our listeners, pat yourself on the back. You guys have made it to the end of the show, and most people never finish what they start. If you receive value from today's show, be sure to share it on LinkedIn, your Facebook page, or your social media platform of choice. Subscribe to never miss a valuable episode in the future. And if you found value in today's episode, give us a thumbs up with a positive review. If there's a particular topic you'd like to hear about, well, I want to hear from you. Shoot me a message on LinkedIn. The link to my profile is below in the show notes. You can connect with me there for more valuable content.